A Dividend Aristocrat is a company in the S&P 500 index that has increased its dividend payment for at least 25 consecutive years. These are often seen as well-established, financially sound, and growing businesses. Their impressive track records of growth make them some of the most attractive dividend stocks to own. So much so that there is an entire ETF under the ticker symbol NOBL that tracks the S&P 500 Dividend Aristocrats. In this video, I'm going to provide a 2023 updated analysis of all 68 Dividend Aristocrat stocks. My name is Zach, this is Dividend Data, and you should leave a like and subscribe if you enjoyed the video. Throughout, I'll be using my stock research tool, which is available at dividenddata.com. Here you can do deep financial analysis for over 8,000 stocks on the New York Stock Exchange, NASDAQ, and Amex. The tool displays every notable financial metric displayed with detailed charts and tables, as well as calculated growth rates. If you like what you see, then sign up at dividenddata.com. Link in the description and pinned comment. Alright, now I'm going to briefly analyze all 68 Dividend Aristocrat stocks. Comment below if you want me to do a full video on any of these companies. I'm going to start with the stocks who have the highest consecutive years of dividend growth. Dover, ticker symbol DOV, is a diversified global industrial stock currently valued at $19.5 billion. Dover has 67 years of consecutive dividend growth. However, this growth has slowed in recent years with a 5-year compound annual growth rate of 1.45%. This is likely due to the company's slower growth of free cash flow. That said, Dover's dividend is very safe with a low payout ratio ranging from 25 to 40%. Top of dividends, the company has reliably repurchased shares for decades, helping return capital to shareholders. This has been a strong part of the stock's total return. With a current PE of 18, slow growth, and a 1.44% dividend yield, Dover does not seem like an obvious value at current prices. Genuine Parts Company, ticker symbol GPC, is an automotive and industrial parts retailer currently valued at $21.5 billion. GPC has 67 years of consecutive dividend growth. Over the past 10 years, the dividend has grown at a 5.87% CAGR. With a current payout ratio of 40%, GPC is set up for sustainable growth. The company is currently trading at a PE of 18 and 2.48% dividend yield. Depending on your purchase price, GPC seems like a solid dividend growth stock. Emerson Electric, ticker symbol EMR, is an industrial machinery company currently valued at $47.3 billion. EMR has 66 years of consecutive dividend growth. The company has very slow growth with a 10-year CAGR of 2.41%. Payout ratio ranges from 40 to 60%. Emerson is currently trading at a 16.8 PE and 2.51% dividend yield. Despite reliable dividends, the low growth leaves it a worse value relative to other dividend stocks. Procter & Gamble, ticker symbol PG, is one of the best consumer packaged goods companies currently valued at $345 billion. They own top brands in various categories like Old Spice, Gillette, Tide, Gain, etc. Procter & Gamble has 66 years of consecutive dividend growth. Over the past 10 years, the dividend has grown at a 4.5% CAGR. The current payout ratio sits around 60%, which is sustainable. On top of dividends, they reliably repurchase shares. The company currently trades at a 25 PE ratio and 2.57% dividend yield. This is a premium valuation for a slow growth, mature company. Despite their dominant market position, I would not buy unless there was a strong dip in prices. 3M, ticker symbol MMM, is a diversified industrial conglomerate currently valued at $56.5 billion. 3M has 65 years of consecutive dividend growth. Despite this great history, growth has slowed massively in recent years. The 5-year dividend CAGR sits at 1.98%. With a 60% payout ratio, the dividend is sustainable based on financials. However, 3M has a major risk in that they are facing a potentially blockbuster lawsuit with military service members over their earplugs products. The liability potential is massive, which has driven down the stock over the past year. In fact, fact, this led me to selling my 3M stock last fall. That said, 3M is now trading at a 10 PE and a 5.85% dividend yield. If the liability risk proves to be minor, then 3M could be a strong value play. Cincinnati Financial, ticker symbol CINF, is an insurance company currently valued at $15.8 billion. CINF has 63 years of consecutive dividend growth. Over the past 10 years, the CAGR of the dividend is 6.3%. The most recent increase was 8.7%. This was driven by strong free cash flow growth. Based on 2022, the 10-year CAGR of the free cash flow per share is 12.76%. The current dividend yield is 2.98%. This seems like a solid dividend growth stock, but I need to do more research on the business model. The Coca-Cola Company, ticker symbol KO, is the leading global beverage company currently valued at $264.4 billion. They own some of the top brands in multiple beverage categories, including their flagship product, Coca-Cola. This has dominant worldwide market share with industry-leading margins. It's a cash cow. KO stock has 61 years of consecutive dividend growth. Over the past 10 years, the compound annual growth rate of the dividend is 5.09%. Coca-Cola is able to sustainably pay out most of their cash to shareholders via dividends. The current payout ratio is around 80%. KO stock has a current PE ratio of 27 and a dividend yield of 3.01%. Despite the rock-solid business fundamentals, the premium valuation and low growth rate leave me not wanting to buy in at current prices. Colgate-Palmolive Company, ticker symbol CL, is a global consumer products company across oral, personal, home care, and pet nutrition. It's currently valued at $63 billion. CL stock has 61 years of consecutive dividend growth. The rate of growth has slowed with a 5-year CAGR of 2.71%. The current payout ratio ranges from 70 to 95%. At current prices, CL stock has a dividend yield of 2.52%. Once again, the company trades at a premium valuation despite the low growth rate. Johnson & Johnson, ticker symbol J&J, is the leading healthcare conglomerate currently valued at $407 billion. J&J stock has 60 years of consecutive dividend growth. The 10-year CAGR of the dividend is 6.91%. Current payout ratio is 65%. The dividend yield is 3.03%. With sustainable mid-single digits growth, J&J remains a high-quality dividend growth stock. Hormel Foods, ticker symbol HRL, is a food products company currently valued at $26.2 billion. Hormel owns top brands, most notably in various meats, nuts, and snacks. HRL stock has 57 years of consecutive dividend growth. The 10-year CAGR of the dividend is a massive 12.46%. However, this growth has slowed in recent years, averaging about 5%. This is due to a large slowdown in earnings and free cash flow growth. In fact, they have plateaued. That said, the dividend is sustainable with a 55% payout ratio. At current prices, the P ratio is 24 and the dividend yield is 2.7%. With Hormel, I'd expect slower dividend growth moving to the future. Stanley Black & Decker, ticker symbol SWK, is an industrial company with top tool brands currently valued at $12.3 billion. SWK has 55 years of consecutive dividend growth. The rate of growth has slowed, with the most recent increase being 1.27%. However, some worry the dividend could be at risk. Over the past year, earnings have consistently declined, with the past 2 quarters dipping negative. This is a horrible trend. I have not looked into the cause, but continued poor performance could lead to a possible dividend cut. Likewise, the stock has dropped significantly, putting the current dividend yield at 3.96%. Federal Realty Investment Trust, ticker symbol FRT, is a diversified REIT across multiple regions and property types currently valued at $7.4 billion. FRT has 55 years of consecutive dividend growth. The rate of growth has slowed significantly, with a 5-year dividend CAGR of 1.55%. My intuition is that the dividend is safe, but they are partially exposed to the commercial real estate market in San Francisco. If you even remotely follow real estate, you know that the San Francisco commercial office space market is a disaster right now. This has contributed to a large drop in stock price over the past year, giving the company a current dividend yield of 4.74%. I would hold off at current prices and wait for the situation to become more clear. Cisco Corporation, ticker symbol SYY, is a food and supply distribution company currently valued at $36.8 billion. SYY has 53 years of consecutive dividend growth. Over Over the past 10 years, the compound annual growth rate of the dividend is 5.97%. Despite consistent dividend growth, the company has had turbulent economics over the past few years. This was mostly related to pandemic-induced economic shutdowns, closing restaurants, obviously crushed their business, but SYY is now growing earnings to all-time highs. The current dividend yield is 2.75%. The Altria Group, ticker symbol MO, is the leading tobacco company in the United States, currently valued at $80.9 billion. They have a dominant position in their market with top brands like Marlboro. Despite declining smoking rates, the company has continued to grow both earnings and dividends. This may be hard to tell because in 2007 and 2008, they spun out large sections of their business, Kraft Foods, and Philip Morris International. In reality, MO stock has 53 years of consecutive dividend increases. The 5-year CAGR of the dividend is 6.07%. Altria is a cash cow with high free cash flows. However, they had a few large investment blunders over the past decade, like Juul, which forced them to take write-downs. With a current 8.29% dividend yield, Altria seems like one of the best high-yield dividend growth stocks you can buy. WW Grainger, ticker symbol GWW, is an industrial distribution company currently valued at $34 billion. GWW has seen significant stock price appreciation and earnings growth. This has fueled 51 years of consecutive dividend growth. Over the past 10 years, the CAGR of the dividend sits at 7.18%. Recent earnings growth has outpaced dividend growth, resulting in a very low payout ratio at around 30%. Current prices, the dividend yield sits at 1.1%. If growth continues at high levels, then it seems like this could be a great dividend growth stock if bought at a fair price. Target, ticker symbol TGT, is a large general merchandise retailer currently valued at $61.5 billion. The company has 51 years of consecutive dividend growth. This growth exploded in 2021 and 2022 with a 32% and 20% increase respectively. Historically, growth has been much slower. I'd expect dividend growth to slow down dramatically moving forward. The reason for that is a recent decline in earnings and free cash flow. In fact, this past fiscal year, Target posted negative free cash flows. With Target's recent dip in stock price, the dividend yield sits at 3.24%. This lower price makes the stock much more attractive, but keep in mind the declining earnings. PPG Industries, ticker symbol PPG, is a specialty materials company currently valued at $32.8 billion. PPG has 51 consecutive years of dividend growth. The past 5 years, the dividend CAGR sits at 6.62%. The payout ratio is around 55%. In recent years, the earnings growth has slowed, and 2022 free cash flow saw a sizable decline. This is a negative trend moving forward. With a 1.78% dividend yield and low growth, this stock does not seem appealing at current prices. Illinois Tool Works, ticker symbol ITW, is a global industrial product and equipment company currently valued at $69.6 billion. ITW has 51 consecutive years of dividend growth. Over the past 5 years, the dividend CAGR sits at 10.93%. This has slowed in recent years to around 7%. The payout ratio hovers between 50 to 65%. At current prices, ITW stock has a 2.29% dividend yield. With continued reliable growth, ITW could prove to be a strong dividend growth stock. AbbVie, ticker symbol ABBV, is a global pharmaceutical company which spun off of Abbott in 2012. Ironically, AbbVie is now larger than Abbott, currently valued at $241 billion. With its shared history, AbbVie has 51 years of consecutive dividend growth. Over the past 5 years, dividend growth has been at a 9% CAGR. This slowed, with the most recent increase being 5%. Based on free cash flow, AbbVie's dividend is sustainable. The stock price recently declined to a 52-week low, giving it a 4.33% dividend yield. If AbbVie continues its historic growth trends, then this may be a great time to buy this stock. Abbott Laboratories, ticker symbol ABT, is a global healthcare products company currently valued at $181 billion. You can see here in the stock price and earnings graph where the AbbVie spinoff occurred. Abbott has had continued success itself since separating from AbbVie. It too has 51 years of consecutive dividend growth. Over the past 10 years, the dividend has grown at a 13.8% compound annual growth rate. This has slowed in recent years, with the two most recent increases being being 4.44% and 8.51%. The current payout ratio is sustainable at around 45%. The stock has a 1.96% dividend yield thanks to a decline in price over the past year. However, it may need to fall more to be considered a great buy. Becton, Dickinson and Company, ticker symbol BDX, is a healthcare supplies provider currently valued at $71.5 billion. BDX has 51 years of consecutive dividend growth. Over the past 5 years, the dividend CAGR sits around 4.46%. Increases have even been more frequent throughout 2022. The current payout ratio is around 60%. Both the stock price and earnings per share have plateaued over the past 5 years. With a dividend yield of 1.45% and low growth, BDX does not seem attractive at current prices. Kimberly-Clark, ticker symbol KMB, is a global consumer products company currently valued at $45.9 billion. They own top brands in categories like tissues, diapers, and toilet paper. With 51 years of consecutive dividend growth, KMB has shown to have reliable cash flows. However, dividend growth has slowed with a 5-year CAGR of 3.37%. This has declined in recent years with a 1.7% increase for each of the past 2 years. On top of this, the payout ratio has grown to 80% as earnings declined. Inflation ate into their earnings to a higher degree than the company's pricing power allowed. Luckily, earnings are now trending upwards and hopefully to all-time highs. With a 3.47% dividend yield and low growth, I would not recommend KMB stock at current prices. PepsiCo, ticker symbol PEP, is a top global beverage and snack company currently valued at $253.5 billion. They own top brands in multiple categories with a very impressive and diversified portfolio. The relative strength of their brands give them pricing power, which has allowed them to fight inflation. In fact, they've been growing earnings at an increased rate. PepsiCo has 51 years of consecutive dividend growth. Over the past 10 years, the dividend CAGR sits at 8.34%. They just had a 10% increase. The payout ratio ranges from 70 to 80%. PEP stock is priced at a historical high, giving them a 2.75% dividend yield. Despite the company's recent performance and dominant market position, I expect growth to slow down. Much of the inflation-related price increases have likely already occurred. Leggett & Platt, ticker symbol LEG, is a furniture company currently valued at $4.2 billion. LEG has 51 years of consecutive dividend growth. Over the past 5 years, the dividend CAGR sits at 3.9%. The current payout ratio is around 75%. LEG's stock price has seen a major decline, boosting the dividend yield to 5.81%. This could be a potential value play, but keep in mind growth is slowing and earnings have been trending down since 2022. Before I get to the next stock, I'd like to remind everyone that this video is sponsored by my investing software, DividendData.com. Here you can track your portfolio, custom analytics based on your dividend income, and track your earned dividend history. On top of this, you get the stock research tool that I've been using throughout the video. If you'd like to try it out, sign up and become a member at DividendData.com. Now let's get back to the Dividend Aristocrats. Nucor, ticker symbol NUE, is a steel producer currently valued at $35.5 billion. This stock has boomed thanks to steel inflation rapidly growing their earnings. However, their earnings per share have started to come down. Nucor's dividend has 50 years of consecutive growth. Over the past 10 years, the dividend CAGR sits at 3.35%. This is boosted by an inflation-related 23% increase in 2021. Growth has since returned to the slow rate. That said, the company has been raking in cash lately, lowering the payout ratio to 7%. Excess cash, they have started to buy back shares at a high rate, decreasing shares outstanding by 10% in 2022. With the current high stock price, Nucor's dividend yield sits at 1.44%. I'd expect slow dividend growth into the future. S&P Global, ticker symbol SPGI, is a financial service company currently valued at $120.6 billion. SPGI has seen strong stock price and earnings growth over the past decade. They have 50 years of consecutive dividend growth. Over the past 10 years, the compound annual growth rate of the dividend is 12.39%. This has slowed down in line with a slight decline in earnings through the 2022 bear market. market. The 2023 payout ratio is around 30%. At current prices, SPGI has a 0.96% dividend yield. This could be a decent entry point to buy into SPGI stock. Archer-Daniels-Midland, ticker symbol ADM, is a global agricultural product company currently valued at $39 billion. As a commodity-based business, ADM's earnings have benefited from recent inflation. This has driven up both the stock price and earnings per share. ADM has 50 years of consecutive dividend growth. This has accelerated in the past 2 years. ADM's stock price recently declined, bringing the dividend yield to 2.5%. With ADM, profitability levels will depend on agricultural commodity prices. I'd expect growth to slow moving forward. Walmart, ticker symbol WMT, is the iconic retailer currently valued at $401 billion. It operates Walmart US, Walmart International, and Sam's Club. Walmart has 50 years of consecutive dividend growth. However, the company's growth has slowed massively. Over the past 10 years, Walmart's dividend CAGR sits at 1.95%. Payout ratio is around 50%. With Walmart's current price, the stock has a dividend yield of 1.53%. Despite the dominant market position, Walmart's premium valuation and low growth rate do not make it attractive as a dividend growth stock. Consolidated Edison, ticker symbol ED, is a New York City utility company currently valued at $31.8 billion. Over the past 10 years, the dividend CAGR sits at 2.8%. The payout ratio is around 70%. With current prices, the dividend yield is 3.53%. ED stock has such slow growth that is not something I consider at these prices. Lowe's, ticker symbol LOW, is a home improvement retailer currently valued at $124.2 billion. The company has seen significant growth over the past decade. Lowe's stock has 49 years of consecutive dividend growth. The 10-year dividend CAGR is 19.84%. Growth was massive in 2021 and 2022 with 33% and 31% increases respectively. However, the most recent increase was much slower at 4.76%. The Lowe's dividend is sustainable with a 36% payout ratio. On top of this, the company has been buying back shares at an insane rate. This past year, they bought back 9.7% of their stock. The reality is much of this was funded by debt, which is steadily climbing. That said, Lowe's is a financial powerhouse. At current prices, the stock has a 2.1% dividend yield. Lowe's stock seems to be a great dividend growth stock. Automatic Data Processing, ticker symbol ADP, is a cloud-based HR and payroll company currently valued at $89.5 billion. Is the largest payroll company. ADP has 48 years of consecutive dividend growth. The 10-year dividend CAGR sits at 12.59%. The most recent increase was a massive 20.19%. Payout ratio hovers between 55 and 60%. ADP is a dividend growth machine. With the recent fall in stock price, it has a 2.31% dividend yield. This may be a good entry point to buy ADP stock. Walgreens Boots Alliance, ticker symbol WBA, is a pharmacy retailer currently valued at $26.9 billion. WBA has 47 years of consecutive dividend growth. The rate of growth has slowed massively with a 3-year CAGR of 1.58%. Free cash flow has declined significantly for the past 3 quarters, potentially putting the dividend at risk of being cut. Historically, the dividend is well covered by prior cash flow levels. WBA stock has fallen dramatically in price, boosting the dividend yield to 6.16%. If the company can turn it around, then it could potentially be a value play. Pentair, ticker symbol PNR, is an industrial water solutions company currently valued at $9.6 billion. The company has 47 years of consecutive dividend growth. The difference in this chart here is that there was a stock split in 2018 that has not been adjusted. Dividend growth is at a 4.68% 5-year CAGR. With a current 1.5% dividend yield, I do not consider PNR stock to be an attractive opportunity. McDonald's, ticker symbol MCD, is the iconic fast food franchise currently valued at $211 billion. The company has seen strong earnings growth and stock price appreciation. McDonald's stock has 46 years of consecutive dividend increases. The 10-year CAGR of the dividend is 7%, with the most recent increase being over 10%. The payout ratio is sustainable at around 70%. The current dividend yield is 2.1%. Despite being a rock-solid business, McDonald's stock trades at a premium valuation that makes it unappealing for me to buy. I'd be more interested after a sizable decline in price. Medtronic, ticker symbol MDT is a medical devices company currently valued at $111 billion. MDT stock has 46 years of consecutive dividend growth. The 5-year CAGR of the dividend is 8.45%. This has slowed, with the most recent increase being 1.47%. This is likely due to the disruption in earnings during 2020 and slowing earnings growth. The payout ratio ranges from 60 to 95%. Medtronic stock recently saw a large decline in stock price, giving them a 3.3% dividend yield. Potentially be a great entry point if the fundamentals improve to historical standards. The Clorox company, ticker symbol CLX, is a consumer household products company currently valued at $19.9 billion. They own popular brands in multiple categories, most notably Clorox. CLX has 45 years of consecutive dividend growth. The 3-year CAGR is 3.64%. This has slowed even more thanks to a recent 2-year decline in earnings. It seems CLX has been unable to use pricing power to keep up with inflation. In fact, 2022 earnings do not even cover their dividend payment. A dividend cut could be possible, but not likely, as the earnings are starting to trend upwards. Current dividend yield is 2.92%. Given Clorox's current economic decline and slower growth, I think it's still somewhat overvalued. The Sherwin-Williams company, ticker symbol SHW, is a paint and related chemicals business currently valued at $62 billion. SHW stock has 44 years of consecutive dividend growth. The 10-year dividend CAGR sits at 13.76%. This high growth has slowed, with the most recent increase being only 0.83%. This is most likely due to a large decline in free cash flow over the past 2 years. Unless this improves, SHW stock will not accelerate growth to prior levels. That said, the recent fall in stock price has boosted the dividend yield to 1%. That could be a decent entry point if high growth returns. Franklin Resources, ticker symbol BEN, is an asset management company currently valued at $12.5 billion. BEN has 42 years of consecutive dividend growth. The 3-year CAGR of the dividend is 3.57%. Payout ratio is around 40%. With the recent decline in stock price, BEN has a dividend yield of 4.8%. This is a potential value play, but I think there are far better options. Nordson, ticker symbol NDSN, is an industrial machinery company currently valued at $12.9 billion. NDSN has 42 years of consecutive dividend growth. Over the past 5 years, the CAGR of the dividend is a massive 16.7%. This growth has accelerated, with the past 2 increases being 30% and 27% respectively. Payout ratio is a low 25%. The rise of earnings has led to a similar rise in stock price, giving NDSN stock a 1.14% dividend yield. This could be a great dividend growth stock. Aflac, ticker symbol AFL, is a life insurance company currently valued at $40.2 billion. Aflac has 41 years of dividend growth. The 10-year dividend CAGR is 9.15%. Payout ratio sits at a low 22%. At current prices, Aflac stock has a 2.52% dividend yield. This may be a great dividend growth stock to add to your portfolio. Air Products and Chemicals, ticker symbol APD, is a specialty gases company currently valued at $62.4 billion. APD stock has 41 years of consecutive dividend increases. The 10-year dividend CAGR sits at 10.3%. The payout ratio is around 60% based on net income. What's interesting though is that free cash flow has trailed far below the growth of earnings and dividends. This is due to high capital expenditures that are growing at a high rate. This is something I would look into more before buying the stock. Once again, I'd like to remind everyone that I'm using my own stock research tool throughout this video. The tool is available at dividenddata.com. In addition to stock research, you can track multiple portfolios all in one place and get analytics for the dividend-focused investor. If you like what you see, sign up and become a member at dividenddata.com. Now let's get back to the Dividend Aristocrats. ExxonMobil, ticker symbol XOM, is a leading oil and gas company currently valued at $427.5 billion. As the largest direct descendant of Standard Oil, ExxonMobil has 40 years of consecutive dividend growth. The 10-year CAGR of the dividend is 3.75%. The profitability of the oil business largely depends on the commodity price of oil, so Exxon has raked in record profits over the past 2 years. That puts the payout ratio at 26%. That recent profit windfall helped Exxon build a fortress balance sheet with $32 billion in cash on hand. That will help the company continue to pay and grow their dividend during the next oil down cycle. At current prices, Exxon stock has a 3.44% dividend yield. Personally, I prefer to buy oil and gas stocks when they are out of favor and offer a higher yield. Amcor, ticker symbol AMCR, is a packaging products company currently valued at $14.6 billion. The company has 40 years of consecutive dividend growth. Payout ratio is around 90%. The current dividend yield is 4.91%. With a low growth rate and questionable dividend safety, I would not look farther into this stock. Cintas Corporation, ticker symbol CTAS, is a corporate uniform and business service company currently valued at $48.9 billion. The Cintas dividend has grown for 39 consecutive years. It recently changed from a dividend frequency of annual to semi-annual to quarterly. The rate of dividend growth is high, with the past two being 26% and 21% respectively. This is with a low 30% payout ratio. At current prices, CTAS stock pays a 0.96% dividend. Somewhat surprisingly, the Cintas financials are very impressive and the company seems to be a dividend growth machine. This may be worth me looking deeper into. Brown-Forman Corporation, ticker symbol BFB, is an alcoholic beverage company currently valued at $30.9 billion. The company has 39 years of consecutive dividend growth. On top of dividend growth, the company will occasionally pay out large special dividends. Brown-Forman trades at a rich valuation but has a history of reliable growth. McCormick & Company, ticker symbol MKC, is a food company focused on spices, currently valued at $23.7 billion. The MKC dividend has grown for 37 consecutive years. The 10-year dividend CAGR is 8.66%. This growth is now slowing, with the latest increase being 5.4%. The payout ratio is around 60%. With current prices, the stock has a 1.76% dividend yield. At lower prices, I'd maybe find MKC stock more attractive. T. Rowe Price Group, ticker symbol TROW, is an investment management company currently valued at $24.9 billion. T. Rowe dividend has grown for 37 consecutive years. Over the past 10 years, the dividend CAGR has been 12.37%. On top of this, the company will pay out large special dividends every few years. In 2021, they paid out a $3 per share special dividend. The most recent dividend increase was much smaller at 1.67%. This is due to a large earnings decline from the recent bear market. A decline in asset prices, specifically stocks, along with investor hesitation, will cause T. Rowe earnings to fall. This is because most of their earnings come from fees on assets under management. However, if the market grows in the future and T. Rowe increases their assets under management, then their earnings will follow. That means future dividend increases. Personally, I have been using this large decline in stock price to load up on T. Rowe stock. Dividend yield is 4.4%, which is historically high for the base dividend. Cardinal Health, ticker symbol CAH, is a healthcare company currently valued at $21.5 billion. The CAH dividend has 37 years of consecutive growth. The 5-year dividend CAGR is a very low 1%. This is well covered by free cash flow, but net income has been very poor in recent years. With a current 2.37% dividend yield and low growth, I do not find CAH to be attractive. Atmos Energy, ticker symbol ATO, is a regulated natural gas distribution company currently valued at $16.5 billion. The ATO dividend has 36 years of consecutive growth. The 10-year dividend CAGR is 7.77%. Payout ratio is around 50%. The current dividend yield is 2.58%. I need to do more research in this company, as it seems they are running large negative free cash flows every year and raising an increasing large amount of debt. Chevron, ticker symbol CVX, is an oil and gas company currently valued at $296 billion. This is the second largest descendant of Standard Oil. CVX stock has 36 consecutive years of dividend growth. The 5-year dividend CAGR is 6.16%. Similar to Exxon, Chevron has been raking in record profits in the past 2 years. This has allowed them to build their balance sheet and secure the financial future of their business and the dividend. At current prices, Chevron stock has a 3.87% dividend yield. Personally, I prefer to buy the commodity-based oil and gas stocks when they are deeply out of favor. General Dynamics, ticker symbol GD, is a U.S. aerospace and defense contractor currently valued at $57.3 billion. The GD stock dividend has 32 years of consecutive growth. The 10-year dividend CAGR is 8.95%. The dividend payout ratio is around 40%. At current prices, General Dynamics stock has a dividend yield of 2.53%. 5%. Prices fall, this may be an interesting stock worth looking into. Roper Technologies, ticker symbol ROP, is an industrial software company currently valued at $48.9 billion. Roper stock has seen significant earnings growth and capital appreciation. The dividend has grown for 31 consecutive years. The 5-year dividend CAGR is 10.58%. The payout ratio is around 25%. At current prices, the dividend yield is 0.59%. This may be a great dividend growth stock to look deeper into. Ecolab, ticker symbol ECL, is a water treatment company currently valued at $49.2 billion. The ECL dividend has 31 years of consecutive growth. The 5-year dividend CAGR is 5.27%. The payout ratio is 55%. At current prices, the dividend yield is 1.22%. This yield is not very attractive for a low-growth company, especially when earnings are trending downward. West Pharmaceutical Services, ticker symbol WST, is a healthcare company focused on delivery systems for injectable drugs, currently valued at $25.5 billion. WST stock has 30 years of consecutive dividend growth. The 10-year dividend CAGR is 7.18%. This has slowed in recent years to around 5%. The payout ratio is incredibly low at 10%. That said, the dividend yield itself is a very low 0.22% at current stock prices. I would not say this is an attractive stock in terms of dividend growth. LIN, ticker symbol LIN, is an industrial gas company currently valued at $176 billion. The LIN dividend has 30 years of consecutive growth. The 5-year dividend CAGR is 9.1%. Payout ratio is 55%. LIN stock has seen significant stock price growth following the earnings growth. At its current price, the dividend yield is 1.41%. This is a premium valuation that will need continued high growth to be rational. A.O. Smith, ticker symbol AOS, is an industrial machinery company currently valued at $10.2 billion. The dividend has 30 years of consecutive growth. The 10-year dividend CAGR is 17%, declined in recent years to a 3-year CAGR of 7.72%. The payout ratio ranges from 35 to 75%. At current prices, AOS stock has a 1.75% dividend yield. Realty Income, ticker symbol O, is a commercial real estate company currently valued at $40.2 billion. Known as the monthly dividend company, O stock has 30 years of consecutive dividend growth. The 10-year dividend CAGR is 3.81%. At the current stock price, O stock has a 5.13% dividend yield. If you're looking for a monthly dividend payer, this is one of the best. Expeditors International of Washington, ticker symbol EXPD, is a freight logistics and services company currently valued at $17.4 billion. EXPD stock has 30 years of consecutive dividend growth. The 10-year dividend CAGR is 8.69%. The dividend payout ratio is 15%. At the current stock price, EXPD has a 1.21% dividend yield. Recently, free cash flows have been at a record high. If this continues, high dividend growth is inevitable. Chubb Limited, ticker symbol CB, is an insurance company currently valued at $79.6 billion. The Chubb dividend has 30 consecutive years of dividend growth. The 5-year dividend CAGR is 3.91%. The dividend payout ratio is 25%. Recent free cash flows have been at all-time highs. At current prices, CB stock has a 1.79% dividend yield. This is both low growth and low yield. Albemarle, ticker symbol ALB, is a specialty chemical company currently valued at $24.4 billion. Earnings per share has recently exploded upward along with the stock price. My intuition is that this has something to do with commodity prices for their chemicals. The dividend has not yet followed this meteoric growth. The ALB stock dividend has 29 years of consecutive dividend increases. The 5-year dividend CAGR is 3.61%. This growth has actually slowed, with the most recent increase being 1.27%. The latest increase in earnings lowers the payout ratio dramatically. However, if we look into their free cash flow, it seems like ALB stock is now just making up for many years of negative cash flows. With a 0.77% dividend yield, this is a stock I would want to do much more research into before buying. Essex Property Trust, ticker symbol ESS, is a multifamily residential REIT currently valued at $15.1 billion. The Essex dividend has 29 years of consecutive growth. 5-year dividend CAGR is 4.43%. At current prices, ESS stock has a dividend yield of 4.04%. Brown & Brown, ticker symbol BRO, is an insurance company currently valued at $18 billion. The Bro dividend has 29 years of consecutive growth. The 10-year dividend CAGR is 9.84%. The payout ratio is very sustainable sustainable at a low 17%. With continued earnings growth, Brown & Brown will likely be a reliable high dividend growth stock. At current prices, Bro stock has a 0.72% dividend yield. NextEra Energy, ticker symbol NEE, is an electric power utility focused on renewable sources, currently valued at $149 billion. This stock has been a dividend growth machine with 29 years of consecutive increases. The 10-year dividend CAGR is 10.99%. Dividend continues to grow. It should be noted that free cash flows are continually negative. This is as the company invests with massive capital expenditures. These are often funded by debt, which has nearly doubled over the past 5 years. It should be noted that operating cash flows are still continuing to grow. This may prove to be a good long-term strategy, but this concern and lack of deeper research into the stock have kept me from investing in NEE. At current prices, the dividend yield is 2.53%. If growth continues, then this is a solid dividend growth stock. Caterpillar, ticker symbol CAT, is a construction equipment company currently valued at $117 billion. Caterpillar stock has 28 years of consecutive dividend growth. The 10-year dividend CAGR is 8.72%. The payout ratio hovers around 40%. Current stock prices, the dividend yield is 2.12%. Earnings are now at all-time highs, and the current stock price is as well. Caterpillar is a rather cyclical industry based on construction and mining demand. I'd rather buy this stock as a long-term dividend grower when it's out of favor. International Business Machines, ticker symbol IBM, is a technology consulting and software company currently valued at $120 billion. The IBM dividend has 28 years of consecutive growth. However, the rate of growth has slowed massively. The 5-year dividend CAGR is 2%. The most recent increase is 0.61%. Both earnings and free cash flow have been on a downward trend for many years. This has led to lower dividend growth and a stock price decline. Price decline has boosted the dividend yield to 5.01%. If the business improves, IBM is a potential value or turnaround play. Church & Dwight, ticker symbol CHD, is a household consumer products company currently valued at $22.9 billion. They own top brands in various categories. CHD stock has 27 years of consecutive dividend increases. The 5-year dividend CAGR is 4.6%. The payout ratio ranges from 30 to 60%. At current stock prices, CHD has a 1.16% dividend yield. With this yield and low growth rate, I do not find the stock to be a compelling dividend growth stock. C.H. Robinson Worldwide, ticker symbol CHRW, is a freight transportation services and logistics company currently valued at $11.3 billion. CHRW stock has 25 years of consecutive dividend increases. The 10-year dividend CAGR is 5.71%. The most recent increase is 10.91% following a strong year. The current payout ratio is 30%. At the current stock price, CHRW has a 2.5% dividend yield. The J.M. Smucker Company, ticker symbol SJM, is a branded food and beverage company currently valued at $15.8 billion. They own top brands across snack foods, pet food, and coffee. SJM stock is one of the newest Dividend Aristocrats with 25 years of consecutive dividend growth. The 10-year dividend CAGR is 6.97%. This has slowed, with the most recent increase being 3%. Payout ratio is around 60%. Current prices, SJM stock has a 2.74% dividend yield. While still a solid company, unless growth accelerates, there are better dividend growth stocks available. That is all 68 Dividend Aristocrats in 2023. If you want to see what I'm investing in, make sure to subscribe and watch my monthly portfolio update videos, of which a new one will be dropping soon. There, I share my full dividend growth stock portfolio and explain my personal investing strategy. Remember, make sure to do your own research before making any investment decisions. You can sign up for dividenddata.com to track your portfolio and research stocks just like me. On dividenddata.com, you can gain access to the exact tool I used throughout the video. If it helps you find a better stock to invest in, then the tool pays for itself. Link in the description and pinned comment. Thanks for watching.